All attendees are in listen-only mode.
Hello everybody.
Hello everybody.
Welcome to Bursa Malaysia Derivative webinar. And this is the first time that we launched this webinar to all the participants online. And today we're going to talk about introduction to derivative. Now before we begin, I just want to check if you can hear me clearly. Now if you can hear me on the control panel, there's a raise the hand button. So if you can hear me clearly, could you please click raise the hand button to indicate that the audio is working fine on you. Alright, I see a number of hands now. There are still a few people haven't raised their hand yet. Alright, thank you. I think most of you can hear me clearly. Okay, you can put down your hands now. Now we are doing this live and really appreciate your attendance online. We have many people tuning in today to learn about introduction to derivative. Now, but today we have invited a very clever speaker to share with us the introduction to derivative. Now, our topic today is on how you can use derivative to maximize your return and understand what are derivatives, how to trade them, and why you need to trade derivative now, and some of the licensed brokers online. Now, this webinar is approximately 60 minutes long. These are two segments. The first segment is about 40-minute content, and subsequently will be 20 minutes Q&A. So, disclaimer first. Everything we share on this webinar is only for educational purpose only. So in no way that we give you any buy or sell signal to any futures contract that you want to trade. So if you do it at your own risk. Okay? Now, we also have launch a series of webinars for you in the next half year or so. So the next big topic will be on basic of derivative, and then next month we'll talk about getting started in futures, then talking about KLCF futures trading plans, risk management for futures, and futures analysis. Please make sure if you're serious about trading futures, please make sure that you follow us throughout the webinar series, and subsequently you will be a fine trader in futures. Guarantee. Alright, so this series of webinar is brought to you by Bursa Malaysia Derivative and is managed by LifeChamp. Now, without further ado, let me introduce our speaker today. Now, Ty'ng Ty'ng. Yeah, today we are very honored to have invited her to share some of the trading ideas in futures. And she started her career as a future trader in AmFutures and AmInvestment Bank, and subsequently promoted to the heads of futures dealing. She was also responsible in formulating execution of future trading strategies, and she also heads advisory division at eBroking Investment Bank. AmInvestment Bank. So she's currently the key speaker for SIDC and Asia Banking School, providing training for fund managers, research analysts, advisors, and futures brokers. And she also has been a frequent speaker in various seminars organized by Bursa Malaysia. She's also a famous author of this book called Jumpstart Your Stocks and Futures Trading. And she's an entrepreneur, trader, author, and trainer. Now, without further ado, let me hand over the control to Ty'ng Ty'ng. Yeah, and Ty'ng Ty'ng, you can on your slide, sorry, on your webcam, that would be awesome. Alright, just give me a minute. Over to you, Ty'ng Ty'ng.
Hey, hi, thanks, Choong Ty'ng Ty'ng. Thanks, Choong Ty'ng Ty'ng. Good evening to everyone. My name is Ty'ng Ty'ng. Now, everyone will doubt whether this name is as per my IC or not. I can let you know that this is as per my IC. So I would like people to call me Ty'ng Ty'ng. Don't call me Miss Chong. Don't call me trainers. Don't call me teachers. Whatever. You just call me Ty'ng Ty'ng. Very easy to remember, a name that very easy to remember. Now, I'm not going to introduce anything about myself. One thing that I just want to highlight is about this book. I launched a book 1 year ago, which is the first edition and thanks to all my readers, this book successfully being managed to clinch the best-selling author in Malaysia. So you all can get this book in any of the established bookstores, from even Kinokuniya, MPH, Populars, anything that you can name it. I'm not going to introduce about myself. I believe Choong Ty'ng already done the introduction. My seminars or courses that I conducted on average is about 12 hours. The longest I ever conducted is about 14 hours. So today, I'm only being allocated 30 minutes, so I will talk a bit faster. If you have any question, you can continue to ask after the Q&A session. Now, let's start with today's session. Today's session is conducted by Bursa Malaysia Derivative. Today's topic is going to introduce about introduction to derivative. I'm your speaker, Ty'ng Ty'ng. Let's start with the first session. We are going to have 3 sessions for today's session. The first session is additional source of income. Why you need to go for additional source of income? Later, I'll explain to you, especially currently, the living standard is so high. Second session, we are going to touch about introduction to derivative. Now, many of you might not understand the terms derivative. It looks very glamour and very difficult to understand, but don't worry about it. I will explain to you about it. Subsequently, after today's session, you will understand very well about derivative itself. And the last session, we are going to talk about futures, the trend now. Now, futures is one of the products under derivative itself. So you will understand what is the current trend, why people are going to trade futures now, why so many people or so many analysts are talking about futures. Now, move into session 1, additional source of income. I just wonder, how many of you are having your salary monthly basis? Just a show of hands. And how many of you are having business income? Or many of you are not having income, but your income is coming from your partners or your husband or your wife. Now, many of you, when you get your salary, monthly salary, what do? Let me know. There are about 6 parts that you need to allocate every month. Once you get your salary, what do? Firstly, definitely many of you will go for expenses. Now, many of you will tell me, oh, subsequently after expenses, I finished everything. I do not have money for other things already. Please don't do that, because we still have 5 portions to go. Every month, once you get your salary, you need to divide it into this 6 sections before you can go for your investment or trading. First part is your expenses. Now, second part, very important, is go for saving. You can tell me that you do not have money to save because you already spent everything. A very simple question for you all. How many of you, your mobile phone, your current mobile phone is exceeded $800? I mean 800 ringgit Malaysia. Do you really need that expensive phone or not? Think about it. If you take the money, go and invest into the stocks of futures market, then once you get the profit, then only you take the money to go and buy 3 iPhone, 10 iPhone, whatever you can. Second example, how many of you drink Starbucks? I'm not saying that you cannot drink. That is a living standard. It's just that you can delay it. You go for investment or trading first. From there, once you make money, take the money, then only go and buy Starbucks. So you can still squeeze some money for saving, investment, or trading. Your money allocation, third part, you must go for charity. This is very important. Please, whatever you take it, you must give it back to the society, because without the society, we are not who we are today as well. Number 4, you must go for education as well. Continuous education is very important. You must continue to learn. Learning is very important. I think you are very lucky because Bursa Malaysia allocate this session for you for free. But actually, Bursa Malaysia also engage us for this education session for you all. So nowadays, education is very expensive. You need to allocate to learn more and upgrade yourself. Then you will be better. Number 5, you need to go for protection. Now, I'm not going to sell you any insurance. Don't worry, I'm not insurance agent at all. But protection is very important. Now, you know, medical is very expensive. So you need to allocate certain portion for protection. Last part, your remaining money, you must put into investment and trading. This is definitely. Now, this is just an example of how you can do your allocation for your monthly income. Every time when you get your income, allocate for this all portion before you use for your spending. Make sure that you have left something for other things. For example, every month your expenses consist about 40%, your saving about 20%, investment, your protection about 5%, charity about 5%, education about 5%, remaining comes to about 25%, you go for your investment or trading. Now, which product you should invest or trade? Many people will ask me this question, whether should I go for FD, whether should I go for shares, bonds, alternative investment, property. Now, you can see from this graph itself, along your x-axis, you can see that your return getting higher, your risk also getting higher. Now, you need to understand what is your required return yearly basis. From there, only you know which products that you should go with it. For example, if in 1 year, your required return is 10%, if you put all your money into FD, can you get this kind of return or not? Think about it. If you put all your money into FD, right now your FD give you a return, let's say, plus minus 4%. So if you put all your money into FD, that's impossible that you can get a return of 10%. So it's very important that what is your yearly return required. Then you will know which products that you should go with. Two other factors that you need to consider is first, your age. If you're younger, you should go for higher risk product, because there's a chances that you can make it back. If you are older, slightly older or slightly elder, you can go for lower risk product, which is around this area. Is around this area. So it depends on your age. Second part that you need to understand is your asset. If you're having higher asset, you can go for higher risk products, which can contribute to you higher return. Now, if you have lower or lesser asset, then you go for lesser risk product and your return will be lesser as well. It's in tandem. So you need to understand high risk, high return. But it's just that you need to manage your risk. It doesn't mean that high risk is good. It's just that you need to manage your risk, which I will cover later stage. Now, move to session 2, Introduction to Derivative. This is very important for today's session. Do you know what is this building? Many of you might not see it before. This is one and only exchange in Malaysia. It looks like High Court, am I correct? But it is not. This is Bursa Malaysia. Now, derivative is another product of Bursa Malaysia. Why you need to understand whether the products that you are trading is under Bursa Malaysia or not. If the products you are trading is under Bursa Malaysia, it is regulated. Regulated means what? Your money that you park inside with your brokers or your money parked with the banks itself is relatively safe. If it is not regulated, your money that parked it with any entities, for example, overnight, your money might disappear. So make sure that it is regulated. Whatever you do your investment or do your trading, make sure that it is regulated. So for example, if you trade futures, it is regulated under Bursa Malaysia and also Security Commission. So your money parked with the brokers is very safe because they are under segregated account. Now, what is derivative? What exactly is derivative? The term itself is very glamour, am I correct? Very difficult to understand. But this term, if you subdivide it, derivative, if you look at it, the word means derive. Derive is very simple. It derives from one of the products. For example, let's say as a layman terms, we derive from our parents. Without our parents, we are nobody. So this product itself, they need to derive from an underlying products. I'll cover later what is this underlying products about. So it derived from one product itself, but itself standalone, there's no meaning, there's no value. We, by ourselves, we cannot arrive in this world. Now, there are 4 common derivative instruments. There are a lot of derivative instruments, but 4 commons, which is firstly futures contract, which is the most traded contracts in Malaysia. Second is forward contract. Third is option contract. Number 4 is swap contracts. Now, for today, we are going to touch in details about futures contract. In Malaysia, we do have futures contract and also option contracts. Basically, we do not have forward contracts and also swap contracts. Futures and options are traded under Bursa Malaysia derivative itself. Now, in Malaysia, under Bursa Malaysia derivative, there are many products that you can trade. But 2 most liquid products are CPO futures and what we call as FCPO, and also FBM KLCI futures, which is what we call as FKLI. Now, we are going to focus on these 2 products itself. First is FCPO, second is FBM KLCI. But for our presentation purposes, we are only going to use FKLI as an example. For example, this is the screenshot that I just captured this afternoon. You can see that our FBM KLCI today is around 1772. And you can see at the bottom side, the FKLI, you can see the August is at 1771. What I mean by derivative itself is because of KLCI itself, it derived another futures product called FKLI. Without KLCI, FKL itself meaningless. There's no price, there's no value, there's nothing at all. So futures itself derived from KLCI. And you can see that our FKL track very closely towards your KLCI prices. So this is what we mean by derivative products. That means it derived from an underlying. Your underlying products is KLCI. Futures means that you forecast. What is your forecast? For example, by the end of August, let's say on 30th of August, I forecast that our KLCI will be reaching 1780. So what I do is, currently the price is only 1771. So what I can do is I go and buy 1 contract. So if by 30th of August, the market reached 1780, meaning that I already gained 9 points. I will go into details for other courses, but today we are going to touch a brief understanding about futures itself. Now, why you need to trade futures? Can you understand one thing or not? In Malaysia, it is not common for people to trade futures, but do you know that in US, for example, their derivative products is way bigger than their stock market. But in Malaysia, roughly we are having about 10% of stock traders are trading into futures only. Do you know why? So far, what we gather is 2 main reasons. First, education. In Malaysia, lack of education. There's a reason why Bursa Malaysia Derivative is taking the initiative to provide this kind of education free for people to learn. Second, many people are saying that futures is very risky. But one thing that I need to ask you, risk, can you manage it or not? Definitely you can manage. The problem is many people, they do not manage their risk. I will cover in details later how to manage your risk. Once you manage your risk, futures will enable you to maximize your profit and minimize your losses. And you can do very well in futures market. You must remember one thing, different trading cycles, you must go for different products. There's no one product for all the trading cycles. That's why there's the time that you need to prepare yourself for futures. So why trade futures? The first reason why you need to trade futures is simple and easy. For example, in Malaysian market, how many stocks do you have? Included warrants, everything, it comes to more than 1,000. You can see there are more than 1,000 over-counters for stocks and warrants. But for futures itself, basically, you have only 2 counters. As the layman terms, for futures, you have only 2 counters. One is FKLI, one is FCPO. So relatively, for you to do your research or for you to understand the market is easier compared to you need to understand more than 1,000 over counters. You just basically need to understand 2 counters. That's as simple as that. That's why anyone can start with futures easily. It's very simple for you to understand. Second part, you need to understand that the advantages for futures itself is higher liquidity. Sometimes for stocks, when you want to buy, there's no seller. When you want to sell, there's no what? There's no buyer. But when it comes to futures, you can see the buy and the sell side, the quantity, there are a lot. There's no problem for you to buy and sell any of the products itself. When you want to buy, that definitely there's a seller. When you want to sell, definitely there's a buyer. So the chances for you to face with no buyer or no seller is very, very, very low. So the liquidity is relatively high because it's concentrated. It's only 2 counters, so it's very concentrated. Now, the third advantage is small capital. For example, when you buy a stock, let's say this stock's value at $5. If you want to buy 1,000 shares, how much you need to pay? You need to pay 5,000. But for futures, each contract, you just need to pay 4,000. That's it. You just need to pay 4,000. You can start with any contract. That's why the entry level is relatively lower. So you can start with any amount, for example, 4,000, 5,000. You can start. The initial capital required is relatively small. Now, the number 4 advantage is leverage. What do you mean by leverage? Leverage means that you use a small sum of money, you can make a big return. You will use a small sum of money, I repeat, you can make a big return. For example, today when you buy a property, do you need to pay everything or not? For example, this property value at 500,000. Do you need to pay everything? No, you just need to pay, let's say 10%, which is comes to 50,000. You can own the property. So this is part of the leverage. I give you an example of leverage. Now, for example, QCI on August 11th traded at 1769. Now, if I'm going to buy one contract of futures, one contract of futures value, each point in Malaysia comes to $50. So 1769 times ringgit Malaysia 50, it comes to 88,000. Per contract value worth 88,000. But do you need to pay 88,000 to own one contract or not? You don't need. Basically, for you to own one contract, what we call it as one contract, the margin, or as a layman terms, the deposit required is only 4,000. Means what? You use 4,000, you can own a contract worth 88,000. So this is part of the leverage. So your entry level is also relatively low, and the advantage is also you can use it as a leverage product. You don't need to pay 88,000 as a full value. You just need to pay 4,000. You can start your trading. Now, the 5th advantage is also the most important advantage, which is you can profit in the down market. As you all understand, profit in the down market is very important. Now, in Malaysia, for you to trade a stocks, you can only buy. Basically, you cannot short sell. In Malaysia, we have regulated short selling. But as a retailer, it's not easy for you to go for short selling. Very difficult, because for you to go for short selling, at least for cost-wise, economic viables, you need to at least have 200 to 300,000 before you can go for short selling, and there's only limited counter. But for futures, it allows you to profit even in the down market by selling first. I will explain to you in details later about how you sell first. To make profit when the market is going down, how you sell first so that you can make profit when the market really comes down. Now, for example, the last financial crisis in 2008, in less than 1 year time, you can see from January 2008 to somewhere in October 2008, in less than 1 year time, the market actually retraced 725 points. If you take 725 points times $50, each points contributed $50. Every contract, only one contract, you can make 36,000. This is only one contract. Generally, people in Malaysia, we don't own one futures contract only. At least you will own more than one. But this is only one contract. That means in less than 1 year time, when the market coming down, you're losing money in stocks, you can actually use futures to make profit. by selling it. So this is one of the example. In less than a year time, you can already generate 36,000 for one particular contract, which you start with only 4,000. Now, for example, in 2015, you can see that this, since May, the market only one-way direction. You can see very obviously, market is only one-way direction. And you can see that in less than 4 months' time, our KLCI actually dropped 350 points. You can check back. This actually happened in Malaysia. Now, I'm not going to mention whether it will happen again or not. I'm trying to highlight to you what is actually happened historically. For those already in the market long enough, you should know that in 2015, less than 4 months' time, KLCI only one-way direction. Market retraced 350 points. So again, if you take 350 points, your time to each point is $50. This is already stated in the contract specs, which I will cover later. The whole contract, per contract, you can make 17,500. This is only one contract, I repeat. Definitely, people are not going to buy one contract or sell one contract. So with one contract, in less than 4 months' time, you are able to make 17,500. So this is a way for you to have another source of income when the market goes the other direction. I repeat, different trading cycle, you must use different trading product. Now, comes to the last session, which is futures. Why the futures is the trend now? You can see that many people started to talk about futures itself. Why futures is so important right now? Now, first thing I wanted to cover is this. Many people say that 10 years, there's a cycle for a trading cycle for 10 years. After 10 years, there's a recession coming soon. But I'm not going to say about 10 years itself. The actual words that we are going to use is economic cycle. We follow economic cycles. It's just that so coincidentally, normally, an economic cycle is about 10 years. Now, our current economic cycles, our stage is at this stage, which is economic expansion stage, which is at stage 5. So we are approaching the last stage, which is next year. Many research analysts, many people are focusing that our recession will be coming in 2018. Definitely, you can't run away from that. So with that, there's a time for you maybe to look into selling and keep partial of your stocks only. Don't sell everything, provided you are doing trading. If not, you don't sell everything. If you're doing your investment in stocks, you definitely will keep it. But you must know, if you love stocks, you must love futures more. Trust me, if today you love stocks a lot, you must love these products. These products will help you more. So during the downside, you can use futures, firstly, either to hedge or purely to do your speculation on futures itself. It will enable you to make profit during a downtrend. Now, I'll give you an example. In Malaysia, how do you gauge an economy? Basically, people are using GDP. For example, the easiest way is to gauge by GDP. Now, our GDP currently on average is about 5%. Now, we look at the two downside in terms of stocks, stock market downside, in 2008 and in also 2000. Now, if you look at 2000, our GDP is as high as 8.3%. But our index dropped from 1,000 points to the lowest of 550 points only. This happens in a year plus. And the whole market dropped nearly reaching 50%. So even our GDP is very high. People are saying our GDP is very good, so the market will not drop. It depends. It depends. And in 2007, our GDP is as high as 6.3%. And in 2008, our GDP is at 4.8%. But our index from 2008 January, as high as historical high at 1,500, dropped to the lowest level of 800. This is less than 10 months' time. So for you, you really need to prepare yourself. Just prepare, don't forecast, because whatever you forecast, it doesn't mean that you arrive. But you need to prepare yourself. Are you ready for this or not? You see, for both the downside, you can see major retracement for both time. Major retracement, the market need to drop near to 50%. So if next year the market is going to drop 50%, are you ready for that or not? No one's know, because whoever, you or me, we can't predict the market, but I'm going to tell you that this is what happened. For the previous drop, any major retracement is come near to 50%. So at least we must ready ourselves. Remember one thing, we don't do a lot of forecasts, but we prepare ourselves. If the market come down, what should we do? If the market going higher, what should we do? Do you have your proper planning or not? Which I'm going to touch about trading plan in future. Now, I just want to reiterate, futures is a very, very good substitute product. You can do it or use it when the market is on the downtrend itself. So I repeat, different trading cycle, you must use different products, and you need to get ready yourself to use futures product when the market retraces. So futures is definitely a good substitute product for your stock market. You can use it, I repeat, for hedging or just pure speculation. I will touch in details for the subsequent session. Now, this comes to the end for my presentation. I just want to highlight one thing. Successful trading starts with the good trading habits. You must have a good trading habits for you to start. If not, you're going to lose more money. Now, for those who want to follow me through Facebook, you can follow me. You just type in my full name and you can see me through Facebook. Please don't request friends from my Facebook itself. Just click follow. I will follow up with any question. If you have any question, subsequently we will continue with that. Thank you very much. Now we are going to move into a Q&A session.
Yeah, thank you very much, Ty'ng Ty'ng. And for those of you who have any question, you may write in the question box. In the meantime, I'm thinking about the control, Ty'ng Ty'ng. All right, so Ty'ng Ty'ng, the first question they ask is, if future is a good product, then should we use it all the time, even when up or down market?
It depends on your trading objective. Now, different people having different trading objective. Certain people, they are speculators. They trade in and out every day. So definitely buy and sell, they can use it all the time. But for example, if you're very conservative, you only invest in stocks. What I mean is you can use futures to do it as a substitute products. During downtrend, you can hedge your futures. Now, for hedging itself, we are going to cover in the following webinar session, but not during today's session. It depends on individual. I just want to reiterate, it depends on individual objective. Certain people, they are going for different objectives. So it depends on your objective itself. Like I mentioned, certain people, they are going for pure speculation, then you are going to use futures all the time. But if you're using purely for hedging purposes or arbitraging purposes, then you are going to use on certain trading cycles only.
Okay, I see. So the next question is on, just now you focus more on the potential upside of futures. How about potential loss?
Definitely, futures itself is a double-edged sword, which we are going to cover in a subsequent webinar, because today's session is just a brief introduction about futures itself. Futures, if for example, this is a bear market, but you look at it as a bull market and you are going to long it. So if it is a bear market and you long, which is you buy, you're going to suffer losses as well. It's the same thing. Everything is a both side scenarios. So in this case, if it is a bull market and you look at it as a bear market and you start to short it, that's another problem as well. So both sides. Definitely, all the example given is all profit, but definitely if you are looking at the wrong side, you are going to suffer losses as well. But subsequent webinar session, we are going to teach you how to manage your risk. When you learn how to manage your risk, then you will reduce all the losses.
I see. So, may I know who are some of the licensed brokers?
Basically, you can go through Bursa Malaysia website. There's a list of brokers stated. You can cover or call any of the brokers. So long as they are licensed brokers, you can open your account with them. Now, during the webinar session 1, I'm going to cover in details how can you get started in your futures. We will go step by step. Don't worry about it. We are going to cover. It's a series of webinar. So long as you follow us, you will know how to get started. First step, how to get started, how to know your products, everything we are going to cover.
Awesome. Now, so how does one get started in futures? That's the next question.
As I just answer, right? Basically, you can go to I think webinar 2 or 3, we are going to guide you step by step. For example, I give you a very general idea. Firstly, you need to approach your brokers to open your accounts first. It's like stocks. Any brokers, basically in Malaysia, any banks that you can name it, they have futures division, basically. For example, Maybank, AmBank, CMB Bank, RHB Bank, any banks. So basically they have futures division. But some of the stocks division, they have stocks division, they might not have futures as well. For example, Public Bank, they have stocks, but they don't have futures. So it depends. You can get the whole list from Bursa Malaysia website. There are about 20 brokers in Malaysia. So once you approach the brokers, you can just submit, you can sign up, open your account. Once your account being approved, then you can start to trade. It's very simple. We will guide you through step by step how you get this all information and how to get started. I think on webinar 2, if I'm not mistaken.
Okay, so does all broker houses provide trading, futures trading? So that's one of our attendees asking.
Okay, I need to. It depends on the terms that you're using. I try to understand from perspective. I believe your question is, are all the banks they are providing futures? Because so long as in Malaysia they are futures brokers, they provide futures trading. So let's say, for example, if there are licensed futures brokers like AmBank, definitely they are allowed you to open the futures accounts and you can trade. But for example, for Public Bank, they don't have license for futures itself. They are not a futures brokers. Then definitely you cannot open a futures account with Public Bank. This is some of the example. Then, for example, if you go for CMB banks, they have their futures license, their futures brokers as well. You can open your account with them. So it's very simple. You can go and check the whole broker list through Bursa Malaysia website.
Yeah, awesome. So the next question is, as a general rule of thumb, don't financial advisors consider futures as a very risky asset class? And is this something that a beginning investor should look into, or is it best left for experienced investor?
Now, during the presentation itself, we covered 2 things. In Malaysia, why less people going into futures? First reason is because lack of education. There's a reason why Bursa Malaysia Derivative, they are doing a lot of education to educate the younger generation or even the investors or the traders itself, how to do futures itself. Because when you don't understand the products, you tend to perceive that this product itself is very risky. Second part, many of you will mention that futures itself is very risky. Now, every product, there's a risk behind it. The problem is, do you know how to manage your risk or not? And bear in mind one thing, risk is manageable. It just depends whether you want to manage it or not. So when it comes to risk, you need to manage your risk. So long as you know how to manage your risk, futures is not that difficult. It's just that sometimes you tend to listen to other people or you tend to watch certain videos that shows that it's very risky in a way. But it's just that you can see most of the videos or most of the TV channels or any of the videos that they publish or any movies, it shows that futures is very risky. It's just that it gives you the kind of hoo-ha because it's a movie. So actually, futures itself, when you trade, if you manage your risk, it's not that risky itself. Risk itself, about risk and reward and how to manage your risk, I think we will cover in webinar 4. So in details, we will cover in the subsequent webinar.
All right, so the next question is, can the person start trading with minimal knowledge? And how long does a person need to take to learn about trading futures?
This is a very good question. I always tell people, if you don't learn about futures, don't trade. You did not hear it wrongly. I repeat, if you don't learn futures, don't go into the market, because subsequently you're going to lose a lot of money. The problem with many people going into futures is they thought that they know and they did not learn anything. It's just that they find that so easy. That's why they jump into futures and subsequently they burn themselves very badly. I always tell people, you must learn how to trade your futures first before you go into futures trading. For example, some important topics like your trading plan, how you build your trading plan for your futures. Second, how you manage your futures risk. These are very important topics. At least you must understand these two before you can go for futures trading. I repeat, if you don't learn futures, you don't go into futures. Don't trade at all. Now, on average, if you ask me, it depends on individual. Generally, for this 6 webinar session, more or less, I can say that we can cover about 40 to 50%. In details, you need to still learn a bit. For example, when you go into the market, how you do, etc. This is just a brief introduction. At least we can kick you start, and subsequently you can attend any courses so that you can continue to learn. Then only you start with small capital. Test the water before you go aggressively. That is my advice to you all.
Okay, we'll hit your advice definitely. So the next question is, can we trade futures by making a call to remisers?
You mean by calling? I try to understand your question. Your question is trying to say that can you call brokers to place your orders, right?
Yeah, I think that's the question.
In Malaysia, there are in Malaysia, there are 2 types. You can go for offline, you can go for online. What do you mean by offline, online? Offline is very conservative way, very traditional way, which is you call in to your brokers and you place your orders. But nowadays, people tend to go for online, which is you punch in your order or you place your own orders through website by yourself, through their trading apps, through their ads, trading apps, or their website or their link, whatever. So basically, there are 2 options. You can go for offline and you can go for online. But it's just that generally for futures, I would say for retailers, more than 90% they already go online. Less people go for offline. Firstly, one of the reasons is because of the market movement. For futures, it's relatively faster compared to stock market. That's why futures market relatively they are higher in terms of online trading.
So the next question is asking you whether you invest in other futures market, example, American futures market.
You're asking me whether I invest in other markets or not. Now, I'm not going to answer about this question, but basically I can share one thing is many people is asking about this question. Should I start with Malaysian market or should I start in overseas market? Now, my advice to you is you better start with Malaysian market first. Now, there are a few reasons why you need to start in Malaysian market. Relatively, Malaysian market, we are less volatile. Now, people are saying that if less volatile, then no shock ma. But the problem is, are you able to handle the volatility or not? So start with something is not that volatile. Then only you go with something that is more volatile. Second, any news happen in Malaysian market, you know first because you are living in this environment. Let's say if you start with Hong Kong or even US market, you might not easy to access to the information or news, or by the time that you access to the news or information already slow. But relatively in Malaysian market, anything happen to Malaysian market, you know first. For example, in Malaysia, anything happen, let's say there's a politic issue. political issue in Malaysia, you will know first. But in US, you might not know because the time zone different, etc., or the access to the information is slower, you might not know. So my advice to you is you start with Malaysian market, then only you move to other futures market. Start with Malaysia market is my advice. Once you can master it, then only you move into other markets.
Yeah, always start with Malaysian market first because that's your home ground and you have home ground advantage. All right, so the next question is how long do we usually hold a contract? Like which amount of contract should we buy?
Oh, okay. For this is a very technical problem. We are going to cover in webinar 1 because I need to show you certain example. Many of the questions that you are asking is not that I cannot answer at this moment. It's just that it involves a lot of technical example and also involve a lot of examples that we need to give it to you. The question that just now you are asking, which months that you need to go, how long you need to hold, we are going to cover in, I think webinar 1, we are going to touch a bit, and webinar 3, we are going to touch in details about doing a contract for FKLI. By then, you will know how to go with it. For example, which month you should go, August or September. Then, for example, how long you need to hold. I give you a very general understanding is like, for example, futures you can hold, buy at this moment, you can sell at next second. Let's say you buy it wrongly, you can sell at next second. You don't need to hold very long. Some people, you can hold longer. Sometimes we even hold 3 to 4 months. Sometimes even hold longer than that. It depends on your trading objective as well. It goes back to your trading objectives. So generally, we'll touch in details about how or which months you should buy and how long you should hold by, I think, webinar 1 or webinar 3.
Awesome. So the idea is stay with us for the entire webinar series and you will be a fine trader in futures market. So the next question is asking whether are you going to cover options on futures?
For this series of webinar, we are not going to cover. The reason behind is, firstly, futures is Malaysian market is relatively liquid, but option is not that liquid. So we are not going to cover option. For retail investment, for retail investor in Malaysia, I would say near to 100% they are doing futures contract only, not option. Less people they are doing option contracts. And as a start, to suit all the participants or all the webinar participants, we need to start with some things that you all can understand. There's a reason why we only cover for futures.
Awesome. So the next question is, are there any broker that provide demo account trading?
In Malaysia, we don't have, but Bursa Malaysia through bursamarketplace.com, for those who can type in bursamarketplace.com, they have a simulation. I would say that they call it as futures trading plan. It's a simulation games for futures itself. That means they take the price exactly as per the last traded price for our actual market, and you can really monitor your profit and losses or how it works, etc. We are going to cover in webinar 1 how to access to this bursamarketplace.com. So it is something like simulation, because in Malaysia, to my knowledge, in Malaysia, none of the brokers provide a simulation platform for you to test it out. We are not like in US market or in any of the states, like for example, Hong Kong, etc. They have many of them have their brokers, they're having a simulation accounts, but in Malaysia, we do not have. But bursamarketplace.com, they have this called as futures trading plan. It's a simulation as well. So you were able to access and know how to trade. So I will cover in webinar 1.
Yeah, so make sure you follow us on our next webinar. Now, so for stock investment, right, the risk management is we can cut loss. But for futures, how do we do our risk management? So there's the next question.
In fact, in Malaysia, to be honest, stocks itself, less platform provide you stop loss orders, what we call it as stop orders. But for futures, we have stop orders. And this is that means this is an exchange orders, means that when you enter the orders, you're already directly sent to Bursa Malaysia in our case. So whenever it trigger directly. But for example, for stocks itself, when you park a stock orders, it actually park or place with a brokers itself only. When it reach that levels, then only they send to Bursa Malaysia. So it's very different. Futures is more advanced in a way. So futures will enable you to have a stop orders. So you can cut your orders itself, and your stop orders can place at the point that once you already place your buy or sell orders. We are going to cover about these stop orders, I think, on webinar 2 or 3. So you will learn. Futures is more, to be honest to you, futures is more advanced compared to stock in Malaysia.
All right. So the next question is, does future also have as active players of market maker as structured warrants?
Okay, now why you need market makers? You need a market makers means that your market is not liquid enough. Then only you need a market makers. If your market is liquid enough, you don't need a market maker. So in Malaysia, futures market for especially for FKI and FCPO is a very, very, very liquid. There's a reason why at this moment there's no market makers, because the market doesn't require a market makers.
Yeah, nice explanation. Now, the next question is on, can you repeat the explanation of how futures and stock market index is different? Like how futures is derived from the stock market index?
A comparison of stocks and futures we are going to cover on webinar 1. That means we are going to let you see what is the main difference between the stock market and also the futures market, and we are going to cover in details exactly what is futures, why futures is so different from stock market, and which part they are different. Because today's session actually, I did not cover the difference itself. It's just that I'm going to tell you that I show you an example of it derived from the KLCR itself. Because futures itself, if you tell me what is the FKR prices right now, futures itself, without the KLCI, there's no price, there's no value on it. So we must have KLCI, that only there's a price towards your FKI. Means what? If today we take out KLCI, FKI itself, there's no meaning, there's no price, there's no value at all as well. So we track very closely towards the KLCI. On webinar 1, we will show you exactly the different or comparison between stocks and futures. So by then, I will cover in details actually what is stocks, what is futures, what is the difference between these two as well.
All right, so the next question is, can I also use call or put warrant as to do hedging for hedging purposes? So that's the next question.
Oh, very good question. Whether you can use this or not? Yes, in a way. I would say yes, but it depends. There are certain advantage for warrants itself to hedge, and there are certain disadvantage for warrants itself to hedge. There are certain advantage for you to use futures to hedge. There's certain disadvantage for you to use futures to hedge. Now, these we are going to cover somewhere, I think webinar 2 or 3, about the comparison between warrants and using futures to do your hedging, because there are a lot of things that you need to understand. It's a very technical basis, but I wouldn't say that you can use, but it depends. Like for example, I'll give you an example. The disadvantage for using warrants to hedge is because one thing, when it comes to warrants, I give you a very good example. Comes to warrant, one of the factors that determine the price is called time decay. I hope that you can understand this term, time decays. So when you buy or sell, at the time that you buy or sell your warrants itself, the time already passed. You already start to price in. So this is a disadvantage when you go with your warrants itself. But for example, if you go for futures to hedge, the disadvantage is what? You need to pay cash upfront. For example, if you're using warrants, you can hold until T3, then only you pick up, then only you pay the full. But for futures, you cannot. At the point that you initiate a position, you already must have cash to pay as your deposit so that you can initiate a contract. I'm going to go into very details about the comparison between warrants and also futures somewhere in webinar 2 or 3. But as a beginning levels, we are not going to touch about this because I believe many of you don't even understand what is futures itself. So we are going to cover something more simple for you to kickstart exactly what you understand about the futures.
Yeah, I think there must be a lot of quite advanced investors here that are asking us very specific questions, right? But anyway, we will cover those questions, more advanced questions in the later webinar. Now, so the next question is, for every market, there will be futures, or it's only for specific market that they will have futures? I think that's how I interpret his question.
Okay, I tried to interpret the question. You're trying to ask, is it every of the countries having their exchange, they're having futures or not? I try to interpret because I'm not quite understand the specific question that being issued. But I try to understand, if I did not interpret wrongly, you're trying to ask, for example, in Hong Kong, do they have a Hong Kong futures market or not? I would say that generally, majority of the markets, they are having futures market. But some of the countries which their stock market is very small, they might not have a futures market. For example, like Vietnam, like Cambodia, they do not have futures markets. So it depends. Not every markets, but Malaysia will definitely have a futures markets.
Okay, so the next question is, how do we short sell futures?
Oh, very good question. We are going to cover in webinar number 1. This is a common question that people are asking: how to sell first when you don't own the contract, how you sell. A simple understanding for you before we go into details for webinar 1 is just that you just go and sell. It means what? For example, when you buy a stocks, normally you need to buy and own it before you can click a sell button. If you click a sell button before you own the stocks, what will happen? They will tell you that you do not own the stock, they reject your orders for stock market. But for futures, for example, right now, if you think that 1770, the market is very high, you do not own any contract, you can directly in your trading platform, you just need to click sell at 1770. Then you can sell your position at 1770. So if the market coming down, you are making a profit. But if the market going higher, you are going to suffer losses. I'm going to cover in details exactly in current practical environment how you can sell.
Yeah, it looks like there will be more topics for us lining up in the next series of webinars. So now the last questions for this webinar is how one contract is calculated. Like, how is one point one contract?
Okay, generally, we are going to cover in details in webinar, I think number 2. But I'm going to give you a very general ideas is per points. For example, in Malaysia, FKI per points is $50. So basically, for you to own one contract, you just need to pay a deposit of 4,000. Then you own one contract. Every movement, they will auto calculate your profit and losses. We are going to go in details with the example, everything, and also the details calculation, how you calculate this on webinar number 1. If I'm not mistaken, webinar number 1, we are going to cover how to calculate profit and loss for a futures contract. So by then, you will understand very details of how to do that. No worries, we are going to cover very details. That means at least after this 6 webinar series, at least you can kickstart one contract. A very minimum start, like for example, you go for one contract to understand, because this 6 session will enable you to start with it. Don't worry about it.
All right, so we have come to the end of the Q&A session. So how can we support you further? Like we shared with you earlier on, this is just like a teaser on how to entice you to start trading futures and to be more keen to learn about futures, so that you would know how to use the tool in a different market, like what Ting Ting shared just now. During an up market, you can trade stocks and then or trade futures, but during down market, you can't short sell the stock market. So learning future is a way for you to maximize your return during a bear market. So as our economy coming to the end of the expansion period, now is the best time for you to pick up this skill so that during the economy contraction period, you can learn to use futures to make maximum profit from your investment journey. So how can we support you further is we have a series of webinar lined up for you. So for our next webinar, like the link I posted in the chat group, you can click at the link to register for our next webinar. So the basic of derivative, which we'll talk in a bit more depth about how to calculate the points and contract value and how to cut loss and so on. So in next week, it's not too far from now, in next Thursday, which is about 8 days from today, you will learn exactly the basics of derivative. Today we're just talking about why you should trade derivative and why you should trade derivative now. So next week we'll talk about the basics of derivative, the basics of futures. So please register, because we only have limited spot. We can only host 100 people, and make sure you log in early to secure your seat. With that, I want to thank everybody for being a wonderful audience this evening, and I wish you the best in futures trading, and let's learn together and be a profitable and informed and savvy investor and trader. Thank you and good evening, everybody, and see you next week. Bye bye.
Thank you very much.
Yeah, thanks, Ting Ting.